So welcome everyone to the Punjabi Chamber of Commerce, another webinar. And this is Punjabi Chamber of Commerce is to connect all the Punjabi entrepreneurs and business owners across the world into this movement. And this is our website, www.punjabichamber.com. And to become a member, it's free. Please join us on this website. Today's webinar is the least understood tax saving strategy for entrepreneurs. And we are going to cover how to learn how a sound retirement plan can save you money. And we'll go into deep with Pankaj, who is the webinar speaker with me right now. And a little bit about me so that you know who am I. I'm talking about who am I. And I did my MBA around 1992, so it's a lot of years, around 30 years in business and corporate world. And I right now run two organizations. One is for a marketing company, and the other is the capital partner, where we are advising business owners and entrepreneurs and companies on merger and acquisitions and advisory companies, where we invest also money apart from advising, and we invest money and resources to the organizations. So that's what we are doing from our perspective. And I am the co-chair of Punjabi Chamber of Commerce for San Francisco Bay Area chapter with Kulwant Sandhu, who is the co-chair, and she's busy today. And let me talk about a little bit about the Chamber of Commerce here, Punjabi Chamber of Commerce, and what we do. This is a non-profit organization, like I've been saying in my messages. It is funded by the generous support of Punjabi community. It started in 2017 by Gary and start in New Jersey, and it's in the New Jersey area and in the greater New York area. And we have no strict no religion, no politics policy in place in all the chapters. And we have around 17, 18 chapters across the world. And we are a strictly non-political, non-religious organization, like I said. And our main focus is to help entrepreneurs grow their businesses, professionals lead their organizations, and community leaders expand their reach. That is our main goal. And the goal is to help all Punjabis across the world in whatever way we can, but mainly we are helping businesses, entrepreneurs, companies, and professionals who are leading these companies. And our members, needless to say, come from Punjabis are from varied backgrounds, ranging across all sectors and industries, from bigger organizations to smaller ones, and located in US, Canada, Australia, India, and various other countries. And here, signing up is easy. I would request you all to sign up for PCC, and it's super and easy. Just go to the website. There's a simple form so that we can be in touch. We can help you, and you can be a part of a movement. This is a charitable our charitable arm. Like, for giving you an example, when India went through a big challenge for oxygen issues and the third wave or second wave of COVID, we raised around 100,000 and distributed 100 oxygen concentrators in government hospitals in Punjab. And we are also raising funds for other activities like oxygen plants. And we have partnered with Rotary International to disperse these funds and to increase our reach. We also have a youth wing. So ask your kids and to join us and be a part of this movement and help them also learn their heritage, who they are, and that's possible. So here I have the pleasure of having the webinar speaker. He is Pankaj Dayal. I'm sorry, I just somehow took your name off, Pankaj. and he is the owner. He's the CEO of PNR Financial Services Company, and he's a retirement plan advisor. And basically, he works with sponsors as a fiduciary on all aspects of pension plans. And so that means he is in touch with tons and tons of business owners, tons and tons of companies, and in his daily life, right? Have I said enough, or do you want to add a couple of sentences more here?
Thank you very much, Sandeep. I'm really honored and very proud to be a part of this. I am a member of the PCC and I have been following the chamber, not very active. At some point, I definitely want to be more active in it. And the only thing I'd like to add is, yes, my firm is PNR and our focus is retirement plans only. And I've been in the business for about 20 years now.
Awesome, awesome. So let's close this thing off right now so that we can just talk. Okay. So do you see the screen change now? I'm not showing anything right now on screen. Okay. So let me ask you my first question. You know, when I talked to you first, and after that, when I thought about this webinar and I requested you to join here, my main goal was to main actually challenge in my mind was to figure out why do I'm an entrepreneur. I meet tons of businesses on a weekly basis. I meet medium-sized companies, I meet small companies, I meet solo entrepreneurs. I have rarely met anybody who talks about retirement plans, and I don't have for me any retirement plan for me. So why do entrepreneurs need a retirement plan for themselves? That's my first basic question.
Well, let's put it this way. There are some advantages to the business itself, as well as to the employees. If a business has employees, so let's take, from a business owner's perspective, the contributions that are made into any kind of retirement plan are generally tax deductible to the owners. The owners also have some of the areas is that their retention for their employees, especially if they have employees. I have in my own family youngsters that are just starting out. And one of the first things that they look for is, does this company offer at least a 401k? And then if they offer a match, it's even better. But, so they do look for that. The other areas is the assets in the plan can grow tax deferred.
Mm-hmm.
So at some point, look at it this way. If you're in your 20s or 30s and you're just starting out, and by the time you reach to your 50s or 60s, you could have a pretty decent retirement nest egg. So that is the biggest advantage, and it is tax deferred.
Oh, it's
As
definitely.
far as when it comes to plan options, there's quite a few different options available to the entrepreneurs, and we could go into that a little bit. The employee contributions can reduce their employee deductions, so they may fall into a little bit of a lower tax bracket.
Awesome.
Investments are not taxed until they're withdrawn. So there could be quite a few advantages to
So you're
having a
saying,
retirement plan for the
you're
owner
saying
and employees.
yes. So you're saying it is both beneficial to both business owner who has employees and employees who are working in these business owners. Now, that's number one, right? So both benefits. Now,
Absolutely.
suppose I don't have any employee. What I have to do with this? If I am a business owner who has no employee, a professional, a doctor, or a somebody who, and then do I need retirement plan for myself at that time?
Sandeep, I'm sorry, my internet got cut off a little bit, but so you mentioned about doctors.
Yeah, what I'm saying is that I am a business owner. Suppose I do not have any employee. I understand if I have employees, I need to motivate them, so I will need a retirement plan. I need to hire right. I need to improve my hiring process. My quality of hires. I need to have offer them retirement plans. I need to do it maybe for others reasons, for tax reasons and all that. But if I don't have any employee, I'm a solopreneur. I'm a professional lawyer, doctor, and all that. I'm on my own. Why do I need it?
Well, as a solopreneur, you have even more choices where,
Oh,
because once you have employees, you're always restricted by the IRS guidelines. But once you have employees, you're also restricted by the Department of Labor guidelines. But when you do not have employees, that is the best time for you to be able to have a retirement plan. One of the most overlooked tax or benefit of a retirement plan, the money that is in the plan or the assets are creditor protected. So the only entity that can actually take that money away from you is the IRS. But more than likely, no other entity can. So if you have a great business and you're doing well, but 4, 5, 10 years from now, that business is not doing well and there's issues, you have a nest egg. That's the one. Two, that money is available. So if you have a hardship, you are allowed to withdraw money from that. Sometimes if you want to buy your primary home or your first time home buyer, you may be able to withdraw money from that retirement plan. So there
Okay.
are a lot of advantages to it. Yes,
One thing I have just now I thought about is so you're saying that if for a solopreneur or it is also important and they can also use it as an asset protection strategy, right?
absolutely.
Like just like we have LLCs, multiple LLCs created for investments like houses or commercial house or something, so that if anything happens, only one portion of that is goes away. So this you're saying is much better. Now I'm not talking about return perspective, but from asset protection perspective, that there is a nest available and it is protected so well that only IRS can enter it, unless you there is nobody else who can enter it. That's is that
Yes,
what you're saying? Okay,
yes.
that's fantastic. I think I did not know about that. Thank you very much. Now, another question I have is, suppose you have been able to convince me, if through this webinar we have been able to convince people. Now, what's the next step? How do we choose what kind? Like you mentioned, there are many plans. How do you choose a plan? How do you operate it? Do we need to hire somebody, or I can do it myself with my administrative assistant, or how do we establish that plan? Something, you must have, or how do you
Sure,
design it?
sure.
Is there some options available? So please.
Yes, there's quite a few. So I use a three-step process.
Okay.
So the first step is to design the plan. Now, the plan design, as you alluded to a little bit, there are so many different types of plans. You have, I'll categorize a little bit broadly. You have defined benefit, and then you have defined contribution. The most commonly known is the 401k, but that's only one type of defined contribution plan. In a defined benefit, as the name suggests, it's a defined benefit, so you're allowed to put more money into it, but there are other nuances that go along. So these are the two basic type of plans. In defined contributions, you have IRAs, SEP, Roth, simple IRAs, and so on. Then you have your 401ks. You can have a profit sharing plan, and there are different kinds of profit sharing plans. So the first step is the most important, to design the plan that is suited for you. So if you have employees, you have certain options that you can do where you may be able to, as the owner of the business, give yourself a little bit more money, where you do have to give the employees something, but not the same amount, percentage wise and dollar wise. So that is the first step, is to get an idea what the plan is. Now, usually where you see a really good area is when the owners may be a little bit older and the employees are younger, but that's not always the case. So it all depends on the demographics of the business,
Okay.
the income, the stability, and so on. So plan design. Second part is how to implement the plan. There are different service providers. So a plan does need what we call a TPA, or a third party administrator.
Okay.
Then there is somebody who does the record keeping. It can be the same organization or it can be somebody different. Then you have the custody of the assets. So you need to know how and where to custody the assets.
Okay.
And last but not least, you may or may not have. So to answer your question about, do I need an advisor? Yes, if you are going to use an advisor, you do want to select, carefully who you're dealing with. But I believe a good advisor can bring a lot of value to the equation.
Okay.
But no, it is not necessary. There are so many companies that offer direct plans.
Okay.
So that's the second part, is how to implement the plan. What service providers do you want to use? What investments do you want to use? There are two ways to do it. You can get what we call a bundled product. So you go to one company and they do everything, like payroll companies do that. Or you can go and have individual or single entities that will help you with each step of the process, but they all work together. So that's the second step, is to implement the plan. Third, and equally important part, is to monitor the plan on an ongoing basis. So it is not something that you just set up and forget. Yes, you can put it on cruise control, but you do have to keep an eye on your plan. And it's not just about the investments, but you need to know that if your circumstances change, is your plan keeping up with those circumstances, or do you need to make modifications? It is you as the business owner, it is your plan. So you can make changes at any given time on that plan, whether it be the type of the plan or the investments or the service providers, it doesn't matter. It is your plan. So those are the three steps. Now, I was browsing on the IRS website, and they like to use, which makes sense, is a four-step process. And the fourth part that they want to make sure people know about is, if and when you're going to terminate a plan, you need to know. And I have actually come across quite a few companies lately that have not terminated their plans. You know, the plans were there 10 years ago, 5 years ago, but they never filled out the correct paperwork, and it's still out there as an active plan. That
Okay.
could be a problem for the owner of the business.
Oh,
So those are the four steps that I feel are very important, and doesn't matter which service provider you use, you as the owner of the business are responsible for those areas.
and it is a big responsibility, especially when you have employees and their contribution and their money is involved, and you have to see. I understand that's what you're saying. It's a legal responsibility. It's enforced by law by IRS, and they are looking at it much more carefully.
Right.
That's
But having said that, I don't want to scare people that yes, it is, but if you know how and how to navigate, then, it's like driving a car. If
yeah.
you don't know how to drive and you suddenly drive in, a foot of snow, you're going to have a problem. So it's the same thing here. If you understand what goes on and hire the right people, you don't have to be the expert, but you hire the right people and they will help you with it.
Yeah. One thing which just crossed my mind is there a legal requirement for any business owner to ever create or accept a retirement plan? Is there like so for some number of employees or number of the revenue or something? I'm just I hope.
Great, great question. And the answer is yes and no.
Okay.
Okay, so let me give you the no part first. No, legally as of today, there is no requirement for any business owner to offer a retirement plan for their employees. However, the yes part is, here's where it comes in. There are about a dozen states, California is one of them, that have created, it's called a state mandated retirement plan or a state run. There are different names to it. California has something called Cal Savers. And I don't want to get in too much into it because that's a whole nother topic. But there are, like I said, about a dozen states, and I know New York, New Jersey, and California, Oregon are some of the states that are on this list. California plan is active. So the way that works is, if you do not offer
Sorry, I think there is some internet problem.
employees in this thing,
Yeah.
called Cal Savers.
Okay. I there was some internet problem, so our last line I did not hear. So you're saying that the Cal Saver has some requirement of number of employees or revenue or what?
5 or more employees effective June 30th of 2022.
Okay, so
Today,
it's
it is
6 months
at
for
50 employees.
8 months for 50 employees right now, and they are going to reduce it. So if I have 5 employees in my organization, and what if my organization is based out of California, but my employees are somewhere else? somewhere means in Arizona, I suppose.
Well, that is a little gray area, but I believe, I would like to err on the side of caution. So if you are based in California and you have 5 or more employees, regardless of where they're based, as long as they are within the United States,
We
I
should have.
would want to play caution and offer that plan.
Okay, thank you very much for that. And one very important question I have is like when I was working as an employee in various companies, or my wife is currently employed with a very good company, and all these companies have been offering some plans, retirement plans, and get so irritated when I see the restrictions they put on us into where I can invest. And they are usually put on a cruise control mode, and they have some mutual funds and all thing. And I hate those mutual funds. They are not, but there's no other option. So what do you have to say if I have, for me as an individual professional, suppose a doctor or lawyer or somebody, and then if I am a business owner and I'm running my own plan for my employees, do I have better, can I design it better than what my companies have, my employers have done in the past?
Well, there are, a few different things that come into play. So let's take where you have no employees. When you have no employees, you have no restrictions other than obviously the IRS regulations. So you can, believe it or not, you can buy real estate, you can buy gold in a retirement plan.
Okay.
Okay, you have a lot of flexibility. See, again, the key part is employees or no employees. Now, to answer your question, when you are part of a group or part of an organization, if I am the owner of the business, I have that liability. So I want to make sure that I am following the Department of Labor guidelines, and the Department of Labor guidelines say that you have to have a varied investment portfolio available. That doesn't mean you have to have 20,000 mutual funds. And I personally believe that's a disaster waiting to happen, because employees, you as the owner have that fiduciary liability. The employees do not understand that if they make a mistake, it can come back to you. And I will never recommend that to any of my clients. So is it a negative? I don't think so.
Okay.
If the investments are selected properly, I don't think it is a negative.
Okay.
One of the biggest things that is going on in today's world is there's what we call target date funds. Okay, so you can select a target date fund. Is it going to be the best? Maybe, maybe not. But will it give a consistent return? I think so. So that is more important than having the employees select what investments are available in the plan.
Okay. No, that answers my question. And then, so you're saying mutual funds, annuities, and all these gold, real estate, all those things are possible, but there are some rules and they have to be followed. And then that's not a subject for this webinar. We cannot go deep into it. But I wanted to ask you. You talked about Cal Savers, right? You talked about how they are reducing from 50 employees to 5 employees, and it's a big drop. And that means there's a lot of businesses who will need this in California, and that's why we thought of this. I thought of this webinar. Now, my question is government giving some kind of a tax rebate or tax incentive also? Because such a drop should not happen without doling out some dollars for the employers.
Not in the state required programs. Where there are tax benefits to the owners of the business. Okay, so if they decide, if you set up a retirement plan for your business, you may qualify for anywhere from $500 to $5,000 of tax credit.
Okay.
That's not a tax deduction, it's a tax credit, and it's valid for 3 years. So it can be a very good incentive. But if you do not set up a retirement plan, no, in Cal Savers or any state required plan, there are no incentives for the business owner. the money that, at least, if I go into Cal Savers, the money that is there being invested is invested in a payroll deduction Roth IRA. So because it is a payroll deduction Roth IRA, it is a Roth IRA at the end of everything is said and done. So it is after-tax money of the employee that goes into the plan. So there's no incentive for the owner. All they have done is met their requirements by the state.
Okay, and so that means when another thing which I you mentioned a few minutes back was monitoring this thing and having an established um, operator who to do it. Now, how do you select an operator? Number one, and what kind of record keeping and all that, and how much time do you think I have to? Because I don't have time if to do this. So if that means if I have to manage all that, monitor all that, that means I have to have another employee just to manage this. If I have say 8, 10, 10, 15 employees here.
Well, you do, generally this is an HR function after the plan is set up, and, and to monitor it should not take as much time. And depending on, the companies that you work with, you have payroll providers, they have, they have the payroll integration. So most companies have at least what we call a 180. So once you do your payroll, the payroll provider knows what they have to do, and they're going to make the contributions for that employee or participant in the plan. But there is a little bit of requirement, and it's not really a full-time job unless if you go into a company that has, 1,000 employees or something, then it can, it may require somebody to do this full-time. But for the most part, no. The key to it is being organized, putting it on your calendar that January 1, this is due. It's like filing your taxes. It's the same thing. You have this document due or this thing due on this date, and you just put it on your calendar, and it's part of your everyday life. So it shouldn't be a big deal.
Yeah, there are many other things on our calendar also, right? So IRS,
Absolutely.
this 1099 and issuing so many, what do you call that, 1099s in the January or all that. So it's tons of things already. So I think having that is easy. Last question I have is, I think you have answered most of my question. Last question I have is, how do I select a company which is good for us? I know I have, I use Gusto for my payroll, which has been providing very good services. And my friends also use Simple Thing. I think they may have these kind of things available. But and should we look for the software part of it or the customer service part of it? What do you think about that?
You need to look at the whole package. So when I engage somebody, I always give them minimum of 3 quotes from 3 different vendors. So depending again on the situation, if you are going to set up a standard 401k, you could go to just about any company. But what you do need to look at is the software, as you mentioned, what other services or what, the website and all that, the ease of doing business. Because without mentioning any names, I will say I had a situation many years ago where one of the major service providers could not give this company the right platform because it was a startup.
Okay.
So when it was a startup, I had to use other providers. They insisted on using this one. We did it. 6 months later, we had to move. So what you need to look at is the whole package. It's not only the software, the technology, the platforms that they offer, but also the investment vehicles that they offer.
Okay.
And especially when you have employees, you really need to look at the funds and the fees involved, whether they're being paid by the plan as the company or they're being paid by the employee. It's irrelevant. You as the owner have that liability, and all you need to do is ask the questions. And
Yeah.
as long as have a clear idea who's paying for what, what are the costs and who's paying for them, you should be fine. But these are the ways I would be looking at. So as a matter of fact, yesterday I was talking to somebody and they have a small organization and they are going to, they have payroll through one of the major payroll providers, and he had an appointment with them. And I told him these are all the questions that I would be asking, and it's not whether it's the payroll provider or somebody else. So
Yeah.
that's the systematic way of looking at it.
No, definitely, definitely. It's system thinking is very important. So thank you very much. I think I have all the questions which I wrote down answered. And Anshu, can you see if there is any question? Can we open for any questions, please? If there is any question, otherwise we are done.
Sure, sir. Sure. I'll just look into it.
Okay. And we are open for another couple of minutes. If you have any questions, if anybody is online looking at us and have a question, and here is Pankaj, who has tons of experience, he can answer that. And if suppose at all you feel you don't have a question right now and you want to reach out to Pankaj, you can do it through me. I don't have his email ID right now, but you can say Sandeep at smbcapitalpartners.com or Sandeep at winforlocal.com. Send it to me and say PCC on top of it, and I will answer. I will forward it to Pankaj, or Pankaj and I are connected on LinkedIn, and you can search for him on LinkedIn and search for me on LinkedIn, and I think we should be available. Yeah, Anshu.
Sure, sir. I'll do that. I think so. If anybody has a question, can just like unmute themselves. I don't think so. They have questions. If we have questions, we'll just let you know, sir.
Okay, thank you very much. Thank you, Pankaj, and it has been great. I have learned a lot today, and I think CalSaver is going to change a lot of things here in California.
Absolutely. Thank you, Anshu. Thank you,
Thank you,
Sandeep.
sir.
It really, really cannot say enough about. I do follow you on, watch some of your webinars, and I think you're doing a great job, and so is the PCC. I'm really glad to be a small part of a big, great organization. Thank you.
Very much.
Thank you
Thank you.
so
Bye.
much.